Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Back in the saddle, Tuesday, the 11th of October, 2022. Brief week off, had a nice little trip, half with the family, half with some buddies, but back to biz. So we're back to the June lows, a little below for both S&P and NASDAQ. There's still a lot of talk about structural inflation being embedded, lasting longer than most expect. I think Mohamed El-Arian was the one who a couple days ago thought the core PCE is still actually going up. So our sector preferences haven't changed in quite a while. Energy, agriculture, pharmaceuticals. Thus far, I have been disappointed in med device. I thought med device could do a little bit better. It's okay relative, but not on an absolute basis, which is a little disappointing. I thought that a lot of names in that space could really catch a bid, but not yet. That may still happen, but who knows? We did buy a little Walmart somewhat recently. 56% of what they do is on the consumable, non-discretionary grocery side, so I think that actually gains a lot of traction in terms of trading down, what have you. But one thing I'm actually a little excited about, as you know, we are firm believers in active management. The current environment and going forward are primed for active management as the days of ultra easy money are gone for at least now. To that end, a small cap company by the name of Air Test, Adam, Edward, Henry, Ralph, AEHR, really interesting semi-capital equipment company, reported earnings last Thursday. Great numbers. And they're very specialized in terms of what they do. They cater to silicon carbide space, which probably rings a bell for you. That is essential for EVs. They also have other applications, but they did see their top line grow 89% year on year. They're profitable. That's something that's, I think, kind of key these days. They have 2 of the top 4 silicon carbide suppliers as customers. They have multiple additional suppliers testing out their products. According to the CEO, they have a cost advantage versus competitors. Conference call was very constructive. I encourage you to give it a listen if this is something in your wheelhouse. Again, small cap, it's $454 million, I believe, so it is a small one. It's kind of interesting. You have a company that's in a situation where they're kind of hoping they can make enough product to really match what they see potential demand going into 23. We've owned it into the quarter. We bought more yesterday. Stock was up like 23% on Friday. Obviously, we didn't buy more there. You don't need to in this tape. So we waited and bought more yesterday when it was down 10%. And we'll continue to probably buy on dips on this one. And I'm not sure where the exact percentage of portfolio will go. I'm thinking somewhere between 3 and 4 at this point. But it's interesting. So it's just good to see they're in an interesting position given that their number one vertical is taking share in a huge market. So while overall auto sales can decline, these guys, EVs, will likely see growth year on year because they are taking share versus ICE cars. So that's it. Thought I want to point that out. All disclosure out there. We own it. We bought more yesterday. We will likely be buying more going forward. And again, buyer beware. It is a small cap, $454 million. Does have some does have some intraday volatility, as you could probably imagine. And the more people find out about this, it might get a little more exciting, just because there's literally one analyst that covers this thing on the street. So very undercovered, underfollowed. I don't know if 36 million in net cash, so good balance sheet. And these guys, they're in a good spot. That is all. Signing off. Have an awesome day. We will see you Wednesday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.